high level of
in your trading?
knowledge or
What's the barriers that
high
keep
level of
you from
followers.
finding the
So and
success
Yeah.
they
and
see me talking like
consistency
I don't he don't
that you
like
know you
indicators
desire
and
as a
stuff.
trader?
Like who the hell is this guy? So we
Yeah.
should um show them how it doesn't work, how the indicators blown up, how this
Yeah.
stuff just support and resistance, supply and demand only work for a limited time because price does not care about anything.
Yeah.
And
Well, I mean,
Mhm.
there like are areas that price is supported from and the price rejects from, but that's not necessarily the same as the retail way of looking at support and
Yeah,
resistance, you know?
yep,
So,
exactly.
so do you guys have like something in particular?
Not really, but yeah, let's do it and then we
I
can.
was I was like looking at something actually on what was it? It was the this idea about the power of three. Do you guys know that?
Oh,
Yeah.
yeah. I didn't watch the complete video of that. The one he just launched. I think number 11 or 10. Yeah, but he was talking
Okay.
about power of three. Yep.
Yeah, and I was getting like more in depth into that, and basically, I like have my notes here. So should we like talk about that for today's session, or
Yep. Yeah, because we kind of know about accumulation, manipulation, and distribution, so we can add into it.
yeah, yeah, and like one thing, I guess we could put this
Mhm.
thing that I'm about to say next into
Yep.
our trading highlights is that when we're starting like trading,
Uh-huh.
we take one concept and that's all we see on the charts. Like
Yep.
that's it. Like once,
Yep.
because there's so much stuff going on the charts, right? And when
Yep.
somebody shows you something to look for, that's all
Mhm.
you start seeing. So like for us, what we should start
Yep.
doing now that we have all these concepts, like we know what
Yep.
PD arrays are, fair value gaps, order blocks, all that, and
Mhm.
power of three, we need to start blending those. Like
Yep.
where do those concepts blend? Also news, where does that blend? And then give us a higher probability trade. So
Yep.
just something for like when we get started is it's not just one thing, because like when we see that one thing that we're taught, we just try to trade that, but that scenario might not unfold, you know so
Yeah,
we
that's
like need
right.
to start blending concepts. But basically, what the power of three is that I've, I guess, been told, or from like the video that I watched from ICT. Can I share screen?
Yeah, sure, sure.
Oh yeah. Sorry.
Okay.
There you go.
Here, let me like go to a better part of the chart. Um, all right, there we go. I'm going to have my bullish conditions. Power of three bullish conditions. All right.
Yep.
So let's just go over the bullish conditions first. And by the way, I'm like looking at my notes right now as I'm doing this.
Mhm.
So basically we have an area where price opens, right? On
Yep.
a bullish day, right? We don't know if a day is going to be bullish or bearish right when it opens, but we get
Exactly.
clues. So a price probably starts to consolidate, and in a bullish day, that's the accumulation, right?
Yep.
And actually, I won't go into that right now, but so and then price, what it will do, so it will drop, right, on a bullish day, right? So
Yep.
this consolidation is the accumulation, right? And typically we're taught that accumulations are used to go long, and yes, they are. This is where they start. The market maker puts the market in a tight range, and then to accumulate orders, and this is the manipulation, right? So let's type in manipulation. Right?
Yep.
And so what this manipulation does is it's designed to induce selling, right? So, people when they see a consolidation in, especially in retail, they like see this as resistance, they see this as support, and then they like think that price is just going to continue like this and that they can take trades from it. And then there's also other traders that are breakout traders that have this, and they see that price goes below that, and they are they are sellers from this point, right? And then now what the market will do. Now, when I say that what the market will do, I'm talking in terms of probabilities, right? So this is what generally happens. There's a high probability of this happening on a bullish day, right? I'm not saying it's 100% because price could completely tank that same day, and we don't have this this scenario unfold because it's just it's the exception, not the rule, right? And that does happen. All right. So, but this is on a normal day. We have the accumulation happen on a bullish day, the manipulation. And also what this manipulation does is it allows smart money to get in on trades at a lower price as well, right? Because why would you want to be a buyer here when you could be a buyer here, right?
Yeah, even if it's going up.
Yeah. And then price will start to go up, right?
Yep.
Because this is a bullish day, so obviously we expect price to go up. And so this is the I think no, this is not the distribution. This is just the overall move, right? So this is down move is the manipulation. This is the move for the day, and then what we see price do is it'll start selling off. And this is if you look at the daily candle, right? You have something like this. We'll just change the color for this. All right, since this is a bullish day, you know, we have our wicks, right? We have our wicks right here. And so price is accumulating here, right? So this is the open of the candle. Open. This is the close, or the high, you know, the body close of the candle. Right? And this is the low. So when does the low of the candle get created? On a bullish day during the manipulation, right? Smart money is getting into their orders over here. You know, they're buying at a lower price. They're buying when it sells. And then, you know, we know that their pockets are deeper than ours. They like have the ability to even form this candle, right? And then once they get into their positions, the market will start to go up, right? And then we get to this point right here. This point here is this area right here, or sorry, this area right here, right?
Yeah, the high one.
So that's the high of the day.
Exactly.
So let's like write down high. So that's the high of the day. That's the open, low, that's the close, right? And let's just say that the day opens here, right? So this is the open of the day.
Yeah.
Market goes into a consolidation, you know, it's putting the orders in, you know, the market maker is putting a market into the consolidation and keeping orders in a tight range. We have the manipulation, people are being induced to sell. And then we have the real move of the day, which is the expansion upward. And then we have price make the high.
Yep.
And that high lines up with this high, and then they start distributing, right? So this move after smart money gets into all of their profits here, and then they start distributing, right? They like want to close their positions here.
Yeah.
So, and then we go into the distribution phase. Hang on, guys. I have to close the door real quick.
Yeah, no worries.
Right. And when they're distributing, that's when price comes off of the high of the candle and then goes down, right? and then that's the overall move that happens in a day. And now this power of three thing is very fractal in nature, meaning that we see this happening on the monthly, the weekly, and the daily, right? And intraday, as I'm showing here. So now it's exact reverse for a bearish day,
Huh?
right?
Yeah.
So let's draw it out. All right, so on a bearish day, we have price also start in a consolidation, and the exact reverse happens. We have price go up, and then we see price trade down, and then we see price start to go higher, right?
Yeah.
So now let's label this. So this is true day open, and for those of you
Yeah.
that don't know what true day open is, that's midnight New York, right? So that's Eastern Standard Time, right? So that's that. And then we see price go into an accumulation, accumulating orders to propel the market either up or down. And then the manipulation on a bearish day happens where it goes up first. So this is the manipulation.
Yeah, a Judas swing of a fake breakout.
Yeah. I mean, a Judas swing is also a manipulation, intercession.
Yep.
So so we have the accumulation, the manipulation. The move that goes after the manipulation is the actual move of the day. And then we have this distribution. And if we can draw that same example out, we see, let's make this red because this is a bearish day.
Yep.
All right, so that's the wick. This is the wick. We have the open is on top because this is a bearish candle and price trades lower. This is the high. The high of the day happens here.
Yep.
The low of the day. And we have the close. And if we look at price action, this is the open, which is here on a bearish day. True day open, that is, we should say.
Yeah.
The open on this one, I should say, happens at 0 GMT, but the overall trading that we look for this is EST, from midnight, New York to the close of the day. So just to clear up some confusion that might happen there. So we have price accumulating, right? It doesn't deviate much from the open, or it shouldn't. And then we see price trade up, right? We see price trading up. That's the manipulation. It creates the high of the day first, typically, right? And then we see the big move down, right? All the way down to the low of the candle. So this is the high of the candle, and then we see price trading down, 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 right here. And then we see price, taper off from that low and then go just a little bit higher to form that close.
Yep.
And this typically happens at around London close, intraday, that is. And as I said, this is fractal in nature. So let's just say that this was a bearish week, right? So we have Monday kind of be the accumulation, Tuesday or something like that be that manipulation. And that's why ICT says that Tuesday is either the high of the week or it's the low of the week. Like about 70% of the times, right?
Yeah.
About 70% of the times we can expect the low of the week to form by Tuesday's by Tuesday session. And then we have Wednesday, which is like the biggest mover of the day, be that actual move of the week. And then he talks about Thursday being potential reversal days, and that's where we see some sort of this last phase, the distribution happened. And that's where we get that fractility of the markets. So yeah, that's all I have for today. And this is a very, very fundamental part of, I guess, understanding the markets, because this happens over and over and over again.
Exactly. Yeah.
Yeah.
Perfect. Yeah, that was nice. Really liked it.
That's good. Really good explanation.
Yeah,
Yes, thank you.
perfect.
All right, and do you guys have something?
Um, let's discuss some of you guys something.
Nah.
I don't got anything
Not for
prepared,
now,
but
at least. Yeah.
we can do some back testing if you want. What else we want to talk about? What have we studied recently from the videos?
And also something about tomorrow. Tomorrow is a bank holiday in the US. It's President's Day. Tomorrow meaning when a New York session opens.
Like ours today,
Yeah,
So
for you guys.
tonight.
Yeah, tonight for you guys, tomorrow for me,
Uh,
because I'm running on Pacific Standard Time.
Yep.
And also there's something happening on the US pairs, on the dollar pairs.
Yep.
So if I go back, we can see that just this isn't typical Asian session behavior, right? Like typically we
Exactly.
want to see some expansion, but and then we see like a 40 pip rally, you know? But like another thing is we can kind of see the footprints for a larger scale power of 3 possibly, right? Like we have for something bearish. Now this is just something for my own personal price action study, and that is if I go here, if I look at a daily chart, you know, so it's super messy right now, but we can see that we have price, you know, overall bearish. We have this order block here that we hit, and we have the OTE of this range being hit right here. And then possibly we could see, you know, this is like an area that I have highlighted where we could see potential bearish prices, you know? And then now we understand the fractility of the market, and we can go here, and this could be our, you know, potential, you know, our area that we look for. Sorry, it'd be like somewhere around here, right? Or we could even take all of this, but you know, we can see that the market really hasn't moved that much from here, right? And then we see this move up that like started from here. Right? So we have market in a consolidation here, going up, trading into a higher time frame area of discount, or sorry, of premium, because we're expecting some bearish prices, right? And then we see it trade off, right? Breaking all of these lows. And as we saw here on the bearish example, right? Look at this. It goes here and then breaks all the lows of the accumulation phase, right? And then we kind of see a retrace. And because this is a little bit more higher time frame, we could probably expect this move to even be going lower, right? So this probably isn't all of the actual move, right? Because we understand because of fractility. Why is it not letting me do this? There we go. Because of fractility of the markets, this move right here, if we look at it on a lower time frame, is this, right? I have my trend line. It's going like this, like this, like this, like this, like this, and like this until it comes down to this area, right? And that could be what's happening here. I'm not saying it is. This is just for personal price action study. But now let's like look at another thing, right? We have this range extreme. We have a higher time frame daily, not a daily, but a higher time frame bias in general, right? So we come here, and then now let's like draw our fib. It lines up perfectly at that OTE, right? That optimal trade entry right now.
Yes.
I was eyeing price to hit this area right now. I had my fibs drawn earlier before this call, and now we could, I guess, we could be wrong about this, but you know, this is for price action study, as I said earlier. We could possibly anticipate lower prices from here, you know.
Yeah.
If we were to day trade this for going into tomorrow.